I think you have to think about whether the free plan will attract the right users.
Ignition sequence start. 3, 2, 1.
Kristoff, thanks so much for coming on, sharing your wisdom. Appreciate you.
Thanks for having me.
I've read a lot of your blog posts on Freemium, SaaS, unicorns, all this fun stuff. You're an investor, 0.9. You've got an incredible portfolio, Typeform, Algolia. I mean, who are some other folks that you've invested in?
Thanks for that. Contentful is maybe a company that you've heard about, or
sure.
like Gecko Board, which is like one of my still angel investment days prior to 0.9 or Zendesk is probably one of the most
totally forgot about Zendesk.
Well-known ones. And then like somewhat outside of SaaS, there are a couple of companies like Delivery Hero or Revolut that were very happy investors in.
And how do you get in these deals? Like, how did you discover the Algolia, the Typeforms, the Zendesk? Is it the European side of it, or is it relationships? I mean, how do you get access to deals for you?
Yeah, I think it has changed a bit over time. So I think my answer is probably somewhat different for, like, say, like the first couple of years of investing, which is like the period of time between like 2008 and to 2012, 13. There's no clear cut, obviously. And then like the years after that. So when we started this, like first me as an angel investor in about 2008, and then with 0.9 a few years later, there was so little capital available, at least outside of the hotspots like
in the Valley,
Silicon Valley,
New York.
maybe New York or London. That many times there was no competition at all for these companies.
Wow.
We were like finding companies and looking and talking to companies, and either we were like the only investor, the only serious investor they had ever talked to at that time, or they have talked to investors but got lots of rejections. So it was a really, really tough time to raise money in 2008 and 2009, 2010, especially in Europe. I think in Europe probably you had two factors coming together. One, there was never a ecosystem of venture capital comparable to the Bay Area. Yeah. And then you had the impact of the financial crisis of like the end of 2008 when Lehman Brothers
disintegrated.
Exactly. So that was really, really hard to raise, even for companies like Zendesk, and happy to talk about that in a minute. But to get back to like the second part of the question, like how do we do this today? I think today it's much less frequent that we talk to a company and they are the only investor they've ever talked to, which is also, to be honest, it's much healthier if there is
that's the signaling. There's something wrong with the founder if they haven't talked to other investors. Right.
So that would be very unusual today. But I think we still have like very good like access, how you called it, because meanwhile we have a portfolio, we have built up a reputation, we get like referrals, and so while in the very early days it was very much just us finding companies and like emailing them out of the blue. This is like how I found Zendesk and Clio and many other companies.
You just cold emailed them?
Yes.
Dude, I love the hustle. Like most entrepreneurs don't realize investors have to raise their own fund. Like they're their own entrepreneurs, and you go and get your own deals. Like that's cool.
Yeah, I don't know if there was any doubt, investors actually work. Yes.
They work. Yeah.
I don't know if anybody still has that perception of VCs like being on the golf court. I don't know if maybe that's not even a cliche anymore, but it's definitely not if it ever was a reality, that's definitely not what we see today. And there are actually some funny stories around some of these outbound emails. Like some of them went into a spam folder and email again, and in some cases that actually led to investments that we're very happy with today.
So where was on the Zendesk? I believe you can talk about it because they're obviously far along. Yeah. What did they look like when you first met them?
It was really, really early. It was already at
like less than 2 million ARR.
It was much, much less. It was 50K No. Less. It was, I think, 7K MRR.
Whoa.
So like less than 100K ARR.
Wow.
So that was really, really early. I think they had 70 customers, each paying about $80. So 6-7K MRR.
Yeah.
So it was really, really early.
Yeah.
And it was the founders, 3 founders, and like 1 employee and a couple of freelancers. The founders were operating out of one of the co-founders, Alexander's loft out of Copenhagen. There was not even a real office, and some freelancers, and that was the stage of the company.
Now, I know that for Zendesk, there was, moving to the Valley or the Bay Area was, it's always, they're the ones that people point to. If you're European, you have to do that. I feel like it's happening less. I mean, obviously, there's other companies that do both, like an Intercom that's both, in the Valley and in Dublin. If you can remember back those conversations, and from the investor's point of view, what was your feedback for them from your perspective?
Yeah, I think at that time, in like 2009 or end of 2008, beginning of 2009, I think there was no other choice. So at that time, the company didn't manage to raise a Series A here in Europe. Okay. So I remember really those meetings. I went to a lot of meetings with Mikkel, to the VCs who existed at that time.
And they would have been at scale to a certain degree at that point.
It wasn't huge scale. Okay. So I wouldn't blame anybody for not like jumping on that, because I think it wasn't obvious.
Yeah.
I think today they would get funded.
There's more data points too, right? Because like an $80 a month customer back then, there wasn't a lot of companies look like, right?
Right. And it was just a totally different world, right?
Yeah.
Like you didn't have the role models of companies that got to significant scale selling to SMBs, because at least at that time, Zendesk was mostly about SMBs.
For
Meanwhile,
sure.
they went quite a bit upmarket, but there was a lot of resistance because of the SMB angle, and was like really like, how are you going to acquire all these customers? And even the cloud was not a no-brainer yet. I mean, there was already like Salesforce and a couple of other companies that paved the way. But if you look at like the entire cloud spend, how it has changed in those somewhat more than 10 years, it's pretty incredible. Or if you look at the market cap, like it was really a totally different world. And at that time, I think there was pretty much no choice rather than moving to the US, mainly for money, like the most immediate driver, and then for talent. And I think the money reason is gone today, so which is good. So if you are a SaaS company and you want to raise a Series A or a Series B or even a Series C, you can do that in Europe. You still don't have nearly as many options.
With European investors, or stay in Europe and raise from the Bay?
Both.
Okay,
I think if the company has like ticks the boxes, I mean, this is maybe a bit oversimplistic, but if it's a company that has some traction and is onto something, they get an increasing amount of attention from US investors for sure. And there are also a lot more European investors than during those times. So I think the money reason has pretty much gone. Doesn't mean that it couldn't be beneficial, because you have a lot more investors, maybe you have more really experienced investors, but it's not like you have to move to the US because there is simply no money here. The other big question, or the other big driver, like talent, is something which we keep thinking about a lot every single day. How can our SaaS companies, when they need to hire an experienced VP of sales or experienced VP of marketing or product or any of these key areas, like what are the chances of finding them in Europe versus finding somebody in the US? And I think that often is a driver for European companies to make the move. Obviously, there are other reasons, like it's the biggest software market. If it's let's say an API like Contentful or Algolia, then you probably want to be where most of the action is, and where the ecosystem, the strongest ecosystem of customers, partners, like where the other components of the modern tech stack, like Stripe, Twilio, all of these companies, who all have either are from the Bay Area or at least have a very strong presence there. So I think it's still not an equal or a level, I don't know what's the right way to put this, like it's not like an equal playing field for US companies and their European counterparts. I think in some ways European companies are still at a disadvantage because you don't have this huge amount of role models that you have in the Bay Area, where you have Slack, Dropbox, now Zendesk, Salesforce, all these great companies. I mean, obviously, it's incredibly hard and expensive to hire from these companies. So there might even be a little bit of a grass is greener on the other side element, because all founders that I talk to who are in the Bay Area complain, and rightly so, about the difficulty of hiring and keeping people, and then engineers get unbelievable salaries from Google and Facebook. So I think that's the kind of like the other side of the coin there. But I think on balance, I would still prefer to be in an ecosystem where you have a huge talent pool, even if it's very hard to compete and people pay for it, compared to being somewhere where you just don't have that like that level of experience. But I think maybe just to the last point on that, fortunately, maybe for European companies and for us, this is not something that most companies, I think, have to worry about in the early days. I think it's more when you get into scaling. So which is why it's not like we invest in a company and then we immediately discuss, hey, you have to move to the US. So I think it's something that becomes more and more important over time, usually driven by having the need to upgrade the management team or get additional talent.
So scaling.
You have some time to figure it out.
Totally. One of the things I love about you is that you blog quite a bit, Kristoff, and I think you've been doing it for a while, right? How long have you been blogging for?
I think I would have to check, but I think my first Hello World blog post is probably from 2005 or something. That's
crazy.
On blogspot.com. It's still there. It looks like a
the interface.
Dinosaur.
You're not going to win design awards,
no,
but
I'm not,
you're still actively blogging, a few times a year. And and from an investor point of view, people are always talking about adding value. What is your value add? What do you think other portfolio companies would say Kristoff adds some value in these areas from your perspective? I'm hoping that I'm adding value by being just a good sparings partner, whether that's by being a formal board member or not. In the early days, it really usually doesn't matter that much. So you usually don't have these very formal. There's no challenges, big conflicts early days. So
it's more around just being in pretty much contact, almost on a daily basis, and maybe having somewhat more scheduled update meetings or calls every couple of weeks, and so I think it's about the personal interactions where I try to transmit some of the learnings that I've made personally as a founder.
And you're a two-time founder, so you've got real operational experience to bring to the table.
I would say yes on the one hand. On the other hand, I would also say that knowledge is somewhat outdated probably. I think the knowledge that I gained by being an investor in so many SaaS companies over the last 10 years is probably more relevant. I think maybe it helps that I have been a founder myself. I think it helps in terms of the empathy and all the I really have a lot of understanding for all the shit you go through as an entrepreneur, and I've seen the other side of having to raise venture capital and maybe the difficulty in understanding terms and stuff like that. So I think it helps me in terms of just the understanding that, but in terms of solving specific problems, whether that's in terms of the sales funnel or marketing or hiring, I think the more recent experience is probably more relevant. And in addition to being good sparings partners or mentors or board members or however you want to put it, I think meanwhile, our portfolio companies get a lot of value from the other 0.9 portfolio companies.
And do you guys organize like CEO summits, or how do you create that value?
Yeah, absolutely. So we started this, and pretty much almost everything that we did was not a result of a huge master plan. Just like when I wrote my first blog post, I had no idea where this would lead me to. And so I think 7 or 8 years ago, we thought it would be cool to bring together the founders of our, at that time, still pretty small portfolio into one room. And so we organized a meetup for the founders of all of our SaaS companies in San Francisco. And I think we had 30, 40 people there, mostly from the portfolio, some outside experts, some other investors. And that was a huge success because, again, at that time, there was no SaaS stock, there was no SaaSter. You didn't have all these opportunities to learn from your peers. So people really liked that opportunity to learn from each other.
When I raised capital for my company Clarity, that was one of the requirements. When I put the final cap table together, I said, all I ask from you is intros to investors for my next round, and that you invite me to a dinner 2 or 3 times a year with other portfolio. Because that is I don't know, for relationships and talking to another peer, it's, your investor, I always felt like they're a little biased, right? Like they sit on your board, you want to be open, but how much can you really share? But to another peer that's going through it, the same journey, or even a year or 2 ahead of you, is so much value. The fact that you guys did that is, because I had to beg for it.
Really? Yeah.
Oh yeah, these some of them are like, wow, that's you're asking for some real work, and I'm like, yeah. And I think it's more common with bigger investors, but you guys are a $75 million fund. So that's really cool to hear that you've been doing this for 7 years.
So I mean, it's also it's a lot of work, but it's also a lot of fun and the excitement that you can feel.
And you bring in other investors that might lead future rounds.
We did that a couple of times, and I think it was great to give our portfolio companies the exposure,
audience,
right? And then probably also some competitive pressure, because these later stage investors also see, they're not alone here. So I think that was helpful at the time.
Does it change the conversation?
Yeah. What we did in the last years, we made it more private, because we got the feedback that, as you said, what people really appreciate the most is being together with other founders, where you can talk about all your
I can see that,
all your war stories and your concerns, and you don't want to have other investors in the room. So maybe we'll
do that, and then one dinner with the investors.
We might do that as well. But really, the biggest benefit that we see is really bringing people together, letting them learn from each other, bringing in some experts on certain topics, and that's been a hugely valuable for our portfolio companies and ultimately for us as well.
That's cool. One of the things I'm going to say, I mean, it's totally random, but it's worth saying. I analyzed 1,250 B2B SaaS sites to kind of create a design pattern for what I call the authority site. If you're building a site, you need these 5 pages, et cetera. One of my literally favorite companies' websites I ever came across still to this day, is Algolia.
Oh, really? That's
it's
great.
Just the most concise for what they do. It is clear, it's concise, it has the customer reference, it's beautiful, they have solutions. I don't know who's running marketing there. I don't even know who the founders are, but obviously you saw something in them.
Yeah.
What is it about that team? Because to me, if I see something like that, obviously there's some clear thinking. What was it about that team that get you excited about investing in them? Yeah.
I mean, meanwhile, you're right. They have a very good management team. Also, they have a great board, later stage investors and independent board members. So they get a lot of great advice, and it's a very strong team today. When we invested, it was really just the 2 founders, Nicolas and Julien, both
are
from
they out of France?
Yes, they are.
Okay,
they started out of Paris. Meanwhile, they have a dual setup with Paris and San Francisco. Yeah. Paris mostly product and engineering. San Francisco
sales
mostly
marketing,
the commercial part.
Yeah.
And I mean, these two guys are just unbelievably smart. I mean, they are.
Wasn't it a pivot now that I think about it? Was it like an on-premise, on-server? Or maybe it still works that way?
I think there was a slight change.
Yeah.
I think in the beginning, it was mostly, like the original pitch was quite heavy on like we become the best search provider for mobile apps.
That's what it was, mobile
and
apps,
then it became like a lot more than that.
Yeah.
I think it's not. I wouldn't say it's been a pivot.
It's just an extension.
But
of
it's
what
in
they were
between
doing.
a huge extension. And I think none of them has a marketing background or has like significant commercial experience. They are both trained engineers.
Yeah, deep tech.
with a lot of highly relevant specific experience. They were at a search company before that, but I think they're just so smart that they figure it out, and that they learn quickly and find the right people in areas where they need the support.
Hire great.
Yeah.
You've talked about the 4 things I think that companies need or get from freemium. Unpack that for people, because I know it's I remember, I think it was Heaton Shaw and I were arguing. He's saying in the future, every SaaS product will have a freemium alternative. I'm not sure I'm there. And maybe he's changed his view on this. It was about 3 years ago. But what are your thoughts on freemium, as a strategy?
Yeah, that's a good topic to talk about. I think freemium can be fantastic. There's no question about that. There are like a lot of companies, and maybe most famously Dropbox or Slack, where freemium has been a huge driver of their success. But I think at the same time, it's not for everybody. So I think you really have to look at the details and consider a couple of factors to determine if freemium is, let's say, worth a shot for you. At some point, I think if you think it could be right, you probably have to try it, because it's hard to guess what will happen. Like, what is the impact on your sign-up rate, on your conversion rate,
your sales
all of that.
pipeline, all that. Yeah,
I think it has a huge impact. But I think when I look at like companies that we meet, or just products that I look at, I think maybe somewhat too many companies think they have to have a free product. I think generally there is a tendency among founders to underprice. It's maybe somewhat related to that. And I guess the reason is that most people who start a SaaS company have a product or tech background.
Yeah.
Because as a business person, you're useless in the beginning, right?
So you can't do anything.
So you have to,
write the code.
in the beginning, you need people who build the product.
Yeah.
But those people are generally not the ones who have sold to enterprises before, or who enjoy that part. So I think the ideal is always in the beginning, that dream, you put together the product, you put it online, it's self-service, I never have to talk to any customers. I think that doesn't work.
Yeah.
But that maybe explains why there is quite a strong, I don't know if it's a bias or at least a preference towards a self-service, free trial, high velocity model, and why maybe there aren't that many companies that start with an enterprise offering. I mean, I think there are other reasons for that too, around like just how hard it is to build.
So do you think every mid-market B2B SaaS should have a freemium version?
I think not everyone. I think it depends.
What needs
on
to be true?
Yeah, I think there are like some factors that make you a more or less likely
like market
success.
size, I'm assuming, right?
That could be one, and also, I mean, simply maybe starting with your costs. Like, what's your cost structure? Like, do you have a 95% margin, and it's maybe okay. Yeah. But if you maybe have
storage,
exactly. Like if you have significant costs related to bandwidth or API usage, or I don't know if it's something with machine learning, and you have you process a lot of data. So I think then it can become very costly, because the moment you have a free plan, I think you have to assume that 95% of your users will be fine with that, which can then become a huge burden. On the other hand, it's also what you want, right? If you have a free plan, you probably do it because you want to broaden the funnel. So you want all these users, but you just have to think about, like, can I actually
and is the free plan a real product? Because that's the other thing. I feel like sometimes people do freemium, but it's really just a watered down version of their first plan, and it's not enough to actually wow the customer. You know what I mean? Like it doesn't, like MailChimp, great value. I mean, it's the free line's really high. Like you could use MailChimp, get a lot of value from it, and never pay them a cent. And the ROI for them is you're going to tell other people, right? And you're going to.
And I think there's a big trade-off here, right? Like if you offer like too much, then you cannibalize your paying plans. If you don't offer enough, then it's maybe not even enough to get customers to the wow. And I think the reason why it works so well for MailChimp is another of these big factors. And this is, do you have any kind of virality or referral loop built into the product, which MailChimp does, because in the free plan, every email says powered by MailChimp, or you have some kind of signature,
some branded
something there. I think that is an incredibly strong reason why you should consider that. And another example is Typeform from our portfolio.
Oh my gosh, Typeform! What a great product.
Yes, absolutely. And they too have this built-in referral mechanism, because like surveys and forms, they are shared. If you're on a free version, there is some branding or call to action, get your own form. And because of that, it makes a lot of sense that you want to have as many users using the product, sharing their type forms with as many users as possible. But if we were talking about a company that has none of this, like no referral loops, and no idea how they could add one, then I think it would be much less obvious that freemium would work for them. And then maybe the last thing to add is, I think you have to think about whether the free plan will attract the right users. Because if you think
that would upgrade.
Yes, either upgrade, refer. They have to do something of value, right? If they just keep using your product for free forever, that's not great. I mean, so I think you have to think about really you have to have some hypothesis and not just offer it for free because everybody does. And there could be very, very good and valid hypothesis which you can then test. So I don't want to discourage people away from freemium, but I think it's not obvious. I think you have to think through that.
Totally, and it's such a big infrastructure piece to change your back-end code to support it. I know Michael Litt from Vidyard just went through it, and that's a big bet at their scale. That most people start and go up market. For them to come down, that was really cool to see. Typeform, without talking about inside their business, but I've always perceived as a customer, I'm a paying customer for years now. Are they a venture-backed company? I know you're an investor.
They are, yes.
Okay, have they raised, what's the total capital that they've publicly?
I'm not sure if
because it doesn't feel like a lot.
If the amount, it's kind of relative, right? They have raised millions or in the low tens of millions, but they haven't raised hundreds of millions. Okay. So we led their original very early seed round, and then they raised another somewhat bigger seed round, and then an A and a B. So it's a properly funded company, but they are obviously not as old or big as, let's say, SurveyMonkey or other companies in that space. Yeah.
It's crazy. I mean, I remember when the product came out, and you can tell there's some really great product minds behind it. How many companies in your portfolio are freemium?
I don't know the number off the top of my head. I think
you do have 2 or 3 or something.
I think almost everybody has a free trial, and I think that makes perfect sense. I couldn't find a reason why you wouldn't do that.
Well, if your product sucked,
right? Yeah, or maybe that's. I think that's maybe the companies that we try to avoid. If it free, a true freemium is.
Does Typeform have freemium?
Typeform does, and for them it works because
for sure it makes
sense.
Of
the virality, because they also want just to get the brand out, and they want to get customer feedback from as many users as possible. Zendesk, I think they might still have a but
it's buried maybe. It's like FreshBooks or Basecamp. Yeah. It's there's a free version, but we don't even talk about it.
I think they might still have one, and I think they're very generous in terms of startup programs and I don't know, maybe educational licenses and things like that. But I think freemium is not a huge driver of the business. Let's put it that way. Yeah.
And what do you see as the trend in the like seed stage? Because I mean, it's friggin' seeds are now multi-million-dollar seeds, and it's like, is that really an A or is that a B?
Yeah.
What are you seeing? And then on the flip side, there's a ton of debt. New. I don't know, what do you call those? Different financial instruments. Essentially, like they're just creative. Like you've got all these RBFs, revenue-based financing companies. How do you see the future of the predictability of SaaS? So there's more data points and metrics to be able to kind of create some level of a trend line or projections. What do you see changing over the next? And I'm going to throw in another characteristic of even the marketing potentially softening up. Where do you see funding for SaaS companies going?
Yeah, and it's hard to predict anything, right?
Yeah.
It's like I was going to say, especially about the future, but that's kind of like an old joke.
Yeah.
But I think it's especially hard to predict anything about, like, let's say the next few years, because I have no idea if the stock market tanks tomorrow and has all kinds of implications. So I have like no idea about that, and maybe nobody has.
Nobody
or
does.
should
Even
pretend
Buffett said, "Don't try to predict."
To have, right?
Yeah.
I think in the long term, like
10 years.
10 years, I'm super bullish about SaaS.
Yeah.
Like lots of reasons I think why that make me bullish, and because the industry has grown up, there is a lot more available now in terms of financing options, including I think what you were alluding to, like venture debt or credit lines, because the model has become like more understood. So I think now it's pretty clear that if a company, for example, has no churn, and even maybe like positive net retention, like negative churn, then this is a very, very solid company, right?
Yeah.
It's fundable, so you can probably
lend it some money.
Exactly, like you can, like if you have that, and if you have a certain scale, maybe just a million or a few million in ARR, you can probably get some money from a bank, and they will, if they are smart, I think they will monitor your SaaS metrics for their risk modeling and so on. And I think we're starting to see that.
Yeah. Does Europe have like some of these like lighter capitals or Scaleworks, or like do they have our revenue-based financing companies that are starting to look at SaaS in Europe? Or
I do know that Silicon Valley Bank is quite active here as well.
Yeah,
and
on the venture debt side.
There are maybe a few others.
Yeah, but it's still early days.
It's still quite early.
It's really interesting.
These things tend to, I think, still like they are made in the Bay Area, and then it takes some time to kind of propagate.
But it's just fun for me to think of like non-dilutive capital options, even between rounds, to just allow them to get to the next level of scale. And then there's some new ones like Indie VC, which is like, allowing you to buy back your investors. It's neat to see how they're slicing and dicing the financial tooling available to founders, especially in the SaaS space. Is your thesis, you mentioned some non-SaaS companies, is Point9's focus right now mostly SaaS, or what is your thesis from an investment point of view?
So we have two big and like almost equally important areas for us. One is B2B SaaS, and the other one is B2B marketplaces. So B2B is kind of what holds them together.
Yeah.
And there are some companies that have actually both. Like we call them like the SaaS-enabled marketplaces, or you might also have
what would be an example?
Marketplace-enabled SaaS. So a SaaS-enabled marketplace is something which, or what we mean by this is, let's say maybe a company like MindBody, to like not pick one from our portfolio for a change, where like the value proposition that you get as a customer of MindBody is twofold. One, you get customers because there is a marketplace,
huge,
but you also get tools to serve those customers. And we have some companies in our portfolio like Eversports, for example, which is a somewhat similar model, different types of sports, different geographies, where if you are a tennis court provider, for example, you can go to Eversports to get new business, but also to get the tools to manage that.
What are other examples of that? Because that's an interesting one, right? Because like you think marketplaces, even like Airbnb or Etsy, like they have the tooling, but it's to drive the marketplace liquidity. And I think there was a few in like the salon space that there was, I forget her name, but she had one where it was like, the tools for the salon, but also the marketplace. It's fascinating. Is there any other ones that people might know about?
There's definitely one in the like salon space called StyleSeat, which I know because we're an investor in that wonderful company.
That's one of your companies?
Yes.
Oh, great. Emily. No.
Melody.
Yes, I met Melody.
And this was interesting. Like when we invested, I think
it was mostly market.
SaaS.
Was it?
Yeah,
SaaS.
One
came first.
I'm not quite sure if it's the other way around, but it's super synergistic.
Yeah.
Like now, and we've also seen this like from the other way, like from the other direction, where a company like starts with a
marketplace
with a SaaS,
okay,
and adds like, let's say at least revenue generating tools, and maybe eventually even leads.
Yeah,
like Clio is an example, maybe
another great one,
which they started to be a productivity tool, like practice management, like manage your issues, your matters as a lawyer, as a practice management for small law firms, and over time they realized that this is great and lawyers love it. They save, I think, an average of an unbelievable, like I think 8 hours per week or something, which is huge. If you
real
have
money.
Billable hours. But actually what a lot of the lawyers told them was, well, this is great, but we have an even bigger need, and that's to get new customers.
And they're horrible marketers.
Yeah, and so that led Clio to develop revenue generating tools like around like marketing automation or call tracking, CRM type features. So I think it's cool to see companies who leverage both like a marketplace and SaaS, because then it becomes just super, super sticky.
Well, it's interesting because like if you have a marketplace that people use, you got to build the tooling so there's liquidity. So they're building the tool set, and then it's like, okay, well, some people don't actually need the supply or the demand side. They just want the tooling. It's a really neat way to leverage the same code base essentially and monetize it in a different way. It does sound distracting. Like, do you feel like, because I've built a marketplace, Clarity, and I did a SaaS Flowtown. I mean, doing a marketplace on its own is like having twins. Like it's hard. How do you suggest to a founder to think through prioritization around doing those?
I think that's a great point, and I think you can't do both in the beginning. I think that's, at least I haven't seen it. I don't know. Maybe I don't know if
I thought these companies were doing both, and I was super impressed.
I think it takes time, and I think you have to be clear on that path. So, for example, like there is a company in our portfolio called Dog Planner, which you can use as a patient to find doctors, and for doctors it's lead gen, and for doctors it's now also a SaaS tool,
like a practice management.
Yes, exactly. But I think if they had tried to build all of this at once, that wouldn't have worked. And you can also leverage the strength of the different parts. Like for example, it's much easier to sell new business over the phone, right? So there is also this idea of like come for the lead or for the marketplace and stay for the SaaS. Yeah. So this is, or I think there's a company I talked to recently called Cabbage from the US, where I was surprised to hear how effective they have been to sell their product to huge amounts of SMBs in the US.
Because they started primarily as a financing tool.
Exactly.
So marketplace.
Exactly.
But now it's becoming more of a SaaS.
Exactly. And the reason I think why they've been so successful is that early on they focused on that loan, which is a pretty simple sell, right?
Transaction,
if you need money as an SMB because you have to pay your bills.
Cash
Cabbage
flow.
has that money. So that's much easier than trying to sell practice management over the phone, where somebody needs to do a lot of change. Yeah. So I think it's really interesting.
And what has Cabbage created as a SaaS tool set? What's their tooling? What's their offer?
Yeah. So I'm not super close to the company, but an investor, but the way I understood it, it was like everything around cash flow management.
Okay,
and
that's fair.
Like understanding, getting
real cash.
transparency into your business, could be like accounting and all of that.
Yeah,
and I think if they
management.
had started with that tool, I think they wouldn't have been able to get to, I don't know how many hundreds of thousands of customers so quickly.
Interesting.
Yeah.
So really strong product hook gets them to distribution, leverage that distribution. It's almost like an add-on. It's like saying, let's monetize it through a different tool set.
Yeah.
Everybody thinks being an investor sounds like super fun. You talk to smart people, you give them money. To do it well is really tough, and you seem to have done it really well. Great portfolio. Who have you had to become, Kristoff, to, to succeed at doing this over the last, since you've started, like personal journey, just like looking inward? What things, what characteristics, what mindset, what beliefs did you need to kind of, just who did you need to become to be successful as an investor?
That's a good question. I think I've never heard that question, or at least like phrased that way. And I mean, I think first of all, it's still early for us, so we're like really proud of our of what the founders in companies like Typeform and Algolia and Zendesk, of course, and many others have achieved, and that we've been able to play a small role in the journeys of these companies. So we're definitely super happy about that. But at the same time, it still feels like Point9 is a startup too, right? So it's not like it's not mission accomplished or anything anywhere close. Especially because if you invest as a seed investor, as you know, it like takes, I don't know, at minimum 5 to 7 years to build a significant company. Then to see success in a couple of companies at a couple of years, to see success over a couple of funds. You're basically booked until your
10, 15
retirement.
years. Yeah.
So it's a hugely long-term game, and like the feedback cycles are very, very long. So very, very hard to learn from your mistakes, because you don't sometimes know if it's been a mistake until many years later.
That's fascinating.
To your question about like what did it take me, I don't know if I have a great answer to that. I enjoy this job really, like I think every day or almost every day. I think maybe the few times where maybe like the very, very few days that I don't enjoy are maybe when there are like conflicts to resolve with later stage investors, or like when
I saw your blog post about founders shouldn't let the new investors clear out the cap table.
Yeah, I think those are exactly those. Unfortunately, like those things happen very, very rarely. But when you have basically loyalty conflicts, or you think so these rare situations where like things get emotional and where you thought this should be a good relationship and you're disappointed by someone personally. I think that's
happens.
Tough. But it's incredibly exciting to see new ideas, new companies every day, to work with like incredibly talented people, and we have the luxury of choosing who we can work with, both like in our team at Point9 and the companies that we invest in, the LPs we take money from. So this is a pretty incredible privilege. So I think yes, we definitely work hard, but I think we're not working as hard as a CEO, I have to admit as well. I mean, we're just looking back at when I was a founding CEO, I think there is a lot of pressure for us too, like when a deal gets hot, or when there is like some shit happening at a portfolio company, which is pretty much
it happens
daily.
Yeah.
But I think it's still different from like being the CEO of a company, and you have a team in Asia and a team in the US and a team in Europe, and you have to be on high alert like 24/7. And at least at a small company, you're basically the
always
guy who
on.
needs to fix it
Pressure
when the website goes down.
Yeah.
At any day, or when the release is late. So I have a huge respect for all founders who managed to survive that and scale that from zero
It's
all the
really
way
impressive.
to tens of millions of ARR or more.
Yeah.
Yeah.
Where do people find you online, Kristoff?
Sorry, can I say it again?
Where do people find you online?
They can Google us if you want it a bit easier.
Yeah.
Our .9 website is point9cap.com, and we have a Medium channel where we, as a team, put out our thoughts and blog posts. And then there is still my old blog.
Yeah, that blog.
Which is a somewhat cryptic blogspot address, but I have the domain theangelvc.net. So if you go there, you're redirected to kristoff.blogspot.com or whatever it is.
That's awesome. Thank you so much for coming on.
Thank you, Dan.
Appreciate
Really
it.
enjoyed it.
Thanks for watching this episode of Escape Velocity. Be sure to like and subscribe and leave a comment with your biggest insight from our conversation. Be sure to check out the next episode.